Hello and welcome again to another episode of Daily Market Mastery on this mediocre, or actually not that bad Monday afternoon. I hope you all had a great weekend and a good start into this trading week. As always, before we jump into the markets and my personal portfolio again, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, obviously all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, as always, is if you have not done so, go and check out the Elliott Wave principle. You can use the link in the description down below to either order yourself a physical copy like I did, or you can use it to read the entire book online for free. Now, with that said, for the second time today, let's jump into my portfolio. I know that doesn't make much sense to you, but I actually already was 5 minutes into the stream before my lovely wife reminded me that I'm not live yet. Forgot to press the button, so here we start again. We have a slightly green touch to the portfolio. The portfolio is unchanged, still 600 GameStop shares with 6 covered calls sold against it as our biggest position, and a few minor other positions that are really in comparison not that big. And yeah, we have a green start into the day. In GameStop, not much changed. So we have our the green pattern 1, 2, 3, and now wave 4. Impulsive wave, which means the big question is, did we finish wave 4 down here at the 61.8 retracement, or are we already in wave 5 upwards? Either way, while short term there is more downside possible, first of all, I don't expect GameStop to ever, I mean not ever, but in the next couple of months or years, go below 20 again. And even if this were to be only part of the correction and there's still more short term downside, I believe that long term we definitely will go further up. So the only question is, again, is this the end of wave 4 and we're now in the 5th wave up? Or is this only, for example, wave A, we get a wave B, we get a wave C, so a little bit further down for now before we have our 5th wave? Yeah, there's not much else to do here other than wait. And as said, I'm going to keep writing covered calls and rolling them whenever time permits. We can check in, or actually not in because we started later. We can check now if we look for GameStop. Here we have the March 21st calls. If we open the strategy builder, they are for $36. If we were to buy them back and instead roll out by a week, same strike price, for example, right now we can see that would not give us a price, really, no volume there. Yeah, would have to, I don't necessarily want to roll them lower, but if we say, just so we get a quote, so if we roll them to 35, we could actually do that. Do I want to roll them a week to the 35 strike here? Let's check for a second. So if this is indeed the finished correction, what price targets do we get for wave 5? So if this wave 4 would be finished, our wave 5 price targets would be between 33.89 and 41.45. So I actually would ideally like to not roll them further down. So if we roll them further out, we should actually see if we can roll them further up. So if we go here for 37, we still look at a credit. In this case, $120. So we probably will roll all 6 right now for $130 roughly. Double checking. So we roll from March 21st. Those are the ones we have. $36 calls. They will buy back and sell the March 28 for a week longer, $37 calls. So that's what we're going to do. Transmit and what's the mid now? Oh, no. I don't want to pay for them. Definitely not going to pay. No, don't discard modifications. So it was a little bit too slow. Apparently, price might have moved in one direction or the other to affect the quotes that much, because it switched from being, as said, profitable trade. Let's cancel that and check again from the beginning. So yeah, March 21st, $36 buyback. March 28, $37 sell. And if we settle on mid, it still says it should be for a credit. So I'm a little bit confused right now. So again, sell the $37 call March 28, buy the $36 call March 21st. Submit order. transmit. And oh, it filled parts of those. Oh, cancel this one. Cancel this one. So we already got filled on 3 of them. So sorry, I did not notice that. Yeah, paying attention would have been again, buyback March 21st. Maybe I need another coffee today. $36 calls, sell the 37, but only 3 because we only have 3 of them left. And $22 credit, transmit. Let's switch for $21 credit. No, doesn't trigger. Okay, let's stay at $22 credit and see if we can get them to trigger like this. Otherwise, we now just rolled half our position for a little bit of cash to finally, that we can already do. Currency, close the small debt that we had of $50. So transmit, and with that, we should have taken care of our debt. Yeah. And yeah, will they fill? That's so weird. Yeah. So again, let's keep an eye on the quotes for now. So buying back the 36 and selling the 28 for 37. And that theoretically, yeah, 3 times doesn't matter. Click somewhere. Okay, so now it's listed for debit, but yeah. Yeah, that's my bid here for the trade. So yeah, we'll keep the position here. Maybe it will trigger, maybe it won't. Otherwise, we rolled half our position. We can already mark that on the chart. So that would be March 28 at, yeah, not 11, but still, and 37. So we have half our contracts here. So if we're below 36, we're good. And half our contracts now here below 37, we're good. So we definitely, obviously, as mentioned, there is the scenario where we are only part of the correction and there's still further way down, in which case we anyway could have rolled them lower and earn more premium and whatnot. But there is also, as I said, the option that wave 4 is done and we get more upside now. And in this case, obviously, if we wait and sell the contracts later, we make more money. But we also have to consider that we have existing contracts to close out that also get more expensive to close out if we don't roll them. So I feel like this way, if we get the second part to trigger, it's okay. If not, it's also okay. Just have to remember then that we have it split up in 2 expiration days and 2 different strike prices. And yeah, that's pretty much it about GameStop. So things are unchanged. We're waiting, and there should be, as said, at least in the midterm and long term, more upside to come. Now we have a very, very small cash balance of an astonishing around $14. Which means we can use that to buy either 1 share of Immersion, yeah, not very tempting, or 1 share of Barnes & Noble. And we're actually going to buy 1 astonishing share of Barnes & Noble Education Inc. because that way, I shouldn't have converted the balance instantly, but yeah, that way we have at least 50 shares, which is an even number. So there we go. And now we again have to, and I also shouldn't have instantly closed out the balances, yeah, because now we again pay a small fee for closing the out again. And yeah, so now at least we got 1 extra share that we paid for with premium, which definitely isn't too bad. Yeah, what else is there? So since we already bought an extra share of Barnes & Noble, let's jump there. They're having a slightly red day. Barnes & Noble held up quite well. I mean, we can see right now it's going down a little bit. There's almost, we went from, what's that? That's from today. 1160 down to 1070. Yeah, so lost a little bit here, but overall the previous pattern still holds. 5 solid waves up, correction. I'm just not sure about the diagonal that we labeled here, but if this is a diagonal, then we should go further up. Worst case scenario would be that this is some corrective pattern, and now we are going to see 1, 2, 3 strong move down. So if we break the 830 mark, that would be the point where we close out the trade and accept our losses. That said, since I didn't see it in the chat yet, Gabby, if you're here, please let me know. You know, say hi real quick, so I just know that you're there. And yeah, we're moving on. So also BNet unchanged, so we can actually move on. Immersion, we are waiting for this correction to finish. So short term, I expect further downside. So which might actually offer us a better opportunity to then increase our position if we have some spare cash. Costs, we are not 100% sure. I think they resumed out and labeled. Oh no, we haven't. No, we labeled till here, but we're not sure about this pattern here right now. It is theoretically possible that this wave 2 hasn't finished and this is an ABC corrective move that's followed by more downside. That would be a pity, but we'll have to just wait and see how it plays out. Yeah, here we actually will have to switch probably on a 3-day chart to keep track of the what we labeled. Yeah, but that's where we are right now with costs. NEO we already covered. I think no, we didn't. So again, yeah, I've been wrong in NEO twice now. So we caught the bottoms nicely, but not the overall pattern was still. Oh yeah, thank you for saying hi. So just know that you're here. And I forgot to set up the chat overlay for some reason. It's not working. Okay, great. Yeah, well, annoying, weird. Or it's just not working here. Chat highlight. No, it should be here. Okay, yeah, never mind. So then, yeah, we'll survive about it. So I've been wrong twice in NEO, and we're just waiting basically to see if this is finally the bottom of this correction. Although even being wrong, we caught the right turnaround points here and here, but we didn't get out of our position because both cases I wrongly assumed it's the end of the correction. Especially here, it was very tempting to assume this because there are multiple, not rules, but kind of like guidelines that often happen. Yeah, could have made a whatever, almost, yeah, let's say 30-40% gain here and gotten out, but didn't. So yeah, anyway, moving on into the crypto space for a little bit. Bitcoin, we did not fully relabel yet, or did we? We labeled parts of it. So we believe that we right now might be in this correction here. So downsides, further downsides possible, not necessarily needed, but theoretically possible, as said. It's possible that I said wave 4, no, there we went down. This is this wave 4. So technically further downside, ABC. I'm not fully happy with it, but it's possible that this is wave 4. If we have a very, very strong bull market, that would be sufficient. Overall, I would, however, still expect then this correction for the previous pattern, and that's this one. So I would still expect that we correct a little bit further, yeah, overall. So before we then go further up, yeah. I'll just hold the small Bitcoin position that we have either way. And then we'll just see how it plays out. For us, still relevant. Other than that, H&T, yeah, still needs to go a little lower before it goes further up. XYO, we have to relabel. Not going to happen today, unfortunately. XRP, we have to relabel, but from the looks of it, this is our 1, 2, 3, 4, maybe not finished yet. So wouldn't be surprised if we get another push down, but then there will be or should be another push up. Again, just my personal opinion. Don't bet your house because I believe something will happen. And XYO, yeah, could be, as I mentioned recently, but we have to relabel this, so never mind. Yeah, and moving on. We frontline, I looked at earlier today. There we have signs that this might actually be the end of the correction, and there is now wave 5 in progress. There are also alternative scenarios possible, but that's the one that kind of like, so there is the scenario that this is 1, 2, 3, 4, 5, so more downside, A, B, C, and another 5 waves, so we would go down another 50%, while short term there is more upside. And there is the possibility that this is wave A, B, and C, so still short term upside, long term a little bit more downside. But overall, if our bigger labeling, so this here 1, 2, 3, 4 is correct, and even if wave 4 is not finished yet and goes further down, there should then be further upside to the top from the current price, at least 50%. If we first go lower, then at least, then obviously more. And from the bigger pattern, similar thing. So if this is 1, 2, and we haven't finished wave 3 yet, there would be, even though if short term, there might be further downside, and short term, since we're on a weekly chart, means a couple of months in the future, maybe a year, long term, there should be further upside. What's NVIDIA doing? Yeah, we also don't have an updated labeling. Yeah, I promise we'll get to it, but it's just, yeah, I'm honestly, I might rethink the streaming times because I have another stream half an hour or an hour before our daily market mastery episodes, and it's a little bit taxing, to be honest. So I'll have to consider if I switch that around a little bit to have a bit of a bigger break between the streams. But it saps my energy to then dive into the labeling of new things. So I'm gonna say, if there's no request in the chat, which doesn't appear to be the case, then we're just gonna call it a day. Since for my portfolio, it anyway doesn't matter very much. Let's check if the order to switch didn't trigger. Mid price would actually be paying. So we kind of got lucky here to have the first one partially fill for the minus 25 actually. So $25 that we got paid for rolling out and up, which is only in our interest. So every time we can roll for a credit. So if you're not familiar with options, if we have the March 21st, $36 call option sold, it means if GameStop goes above 36 in between and the options get executed, or at expiration is above 36, then for each option, I have 100 shares called away, and basically I get paid $36 per each share. Yeah, which means if I can roll them further out in time and up in value, it means I get paid money, in this case $25 3 times, so $75 that we earned in premium for extending it by week, but also now it would have to exceed $37. So I would also get a little bit more money if that were to happen. Obviously, if GameStop shoots to 100, my shares still are sold at 37 in this case, so I would miss out on potential profit. But yeah, overall, whenever we can roll them out a little bit, and especially up, and still earn a premium for it, it's in our benefit or interest, because it means, as said, that we make money while we're just holding the stocks. And considering that I got the calls or the shares assigned originally at a 30 strike price, it means even if they get called away, I on top of that book a profit. Whereas as long as GameStop moves sideways, I just keep earning some premium. It's not a lot. It's not full-time income or something like that. Yeah, but it's extra money in the portfolio that we then use to potentially buy other shares and increase our position slowly. To then sell more covered calls and ideally earn more premium. Anyway, as Gabby said, don't forget, I'm using Elliott Wave Theory or the Elliott Wave Principle, and you can check out the wonderful book about it online for free. And let's switch back here for a second. So yeah, use the link. Now the overlay is working, so it's just somehow not working on the other scene, but yeah. Yeah, don't forget, like, subscribe, enable notifications, and with that, I'm actually gonna call it a day. Thanks for stopping by. I hope you were able to take something away from today's stream, and then see you all tomorrow with another episode of Daily Market Mastery. Till then, bye-bye.